Welcome back everyone to Financial Shenanigan. It's December 13th, 2020. My M1 finance total is at $27,475.49, which is down $147.04 since my previous video. This video is a continuation of my November recap. I went over my portfolio progression in this video, which you can check out if you want a more detailed breakdown. But overall, let's just say that November has treated us very well, with our portfolio gaining more than $3,500. Today, we're going to go over my November stock trades, and I'll bring down specific buys and sells that's worth mentioning. So let's not waste any time because I've made several big changes to my stock holdings, and the first one has to do with my ETF allocations. This is how my portfolio used to look like in October, and as you can see, I had just 4 Vanguard ETFs in consumer discretionary, information technology, dividend appreciation, and telecommunication services. And this is how my portfolio has changed during November. I decided to sell out of VIG, which is Vanguard's Dividend Appreciation ETF. I ended up buying 6 additional Vanguard ETFs for specific sectors, which means that I'm now going to be holding 9 Vanguard ETFs. And VIG, if you know, it's sold out completely. It's just on this list right now, so I can just let you guys know how much of the dollar amount I sold. I might do a future video explaining my ETF picks and why I'm now choosing to hold 9 different sector ETFs, but the short answer is because of diversification. This is Vanguard's official website for VIG. If you scroll down, you can go through its sector breakdowns. As you can see, VIG, it holds 22.7% in consumer discretionary, 12.10% in information technology, and 2.8% in telecommunications. And since I already have these 3 different sectors, consumer discretionary, information technology, and telecommunication services as standalone positions, only VIG, it meant that there was a 37.6% overlap in the companies that I would hold. So, to better diversify my portfolio, I ended up changing my Vanguard ETFs holding. I might just end up adding the remaining sector ETFs. I think I'm missing energy and materials, but I'll let you guys know during my December recap if I do. But in addition to selling out of VIG, I also exited out of 6 different stock positions, and the companies I sold were Bank of America, Clorox, Dunkin' Brands, Johnson & Johnson, JP Morgan, and Procter & Gamble. And Dunkin's brand, I sold for a nice profit when Inspire Brands, they announced that they were going to be buying out Dunkin' to take it private. And the 5 other blue chips companies that I mentioned, I sold because I wanted to focus more on growth stocks. And I mean, blue chip companies like Johnson & Johnson and Procter & Gamble, they're great for dividends. But since I'd rather get a higher stock appreciation and market appreciation, I decided to limit my exposures to value companies. So those were the big portfolio changes I made in November, and you know the drill. If you'd like to stay updated on any future portfolio changes that I'm going to make, plus how well my portfolio is doing, good or bad, make sure to subscribe for my monthly recaps, finance and business news, and random videos like this one.
What's up, you guys? It's Graham here. What's up, you guys? It's Graham here. What's up, you guys? It's Graham here. What's up, you guys? It's Graham here.
Anyway, the last thing I want to touch on is to go over the biggest buys that I had in my portfolio for the month of November, and my 2 biggest buys were for TJX companies and Alibaba. For TJX company, I bought a total of $587.81, and for Alibaba, I bought a total of $246.86. TJX companies, it was the biggest purchase for November simply because after I sold out of my Dunkin' positions, I had to fill out the 5% allocation that I was missing. And even though this position, my TJX company position, it was started just on November 2nd, it's already up 13.77%, which is amazing. In addition to the company being a pandemic turnaround play, TJX companies is a great buy overall because it operates differently from other retailers. And I go over all of my bullish thesis on the TJX companies in this video that I've posted before, so you can definitely check it out if you want to hear all of my reasons why I'm buying. But one of the negatives of TJX companies that I mentioned in that video specifically was that the company, it didn't have a strong online presence. And even the CEO of TJX, he said back in May that they weren't looking to e-commerce as our major leveraging point to get us through COVID and onto the other side. And well, surprise, surprise, they're now changing their tunes and have recently announced that they're going to be launching a home goods website, which is one of their home furnishing subsidiary, because shoppers as a whole, they're still reluctant to visit physical stores. I mean, I'm sure anyone could have told the CEO that, but you know, sometimes for these stubborn CEOs, they need a global pandemic and strict health guidelines and changing consumer trends to change their minds. And I think it's going to be an interesting challenge for them to try to implement the online presence thing, because just the way that their retail business is set up it's more of a treasure hunting and bargain shopping experience with quicker inventory turnovers compared to other companies like Macy's or Nordstrom. So I think if they try to do something like Overstock does with their website, they might do a good job with the home goods one. And I mean, speaking of Overstock, have you seen a crazier run up and crash? Check this out. Overstock stock was trading at $2.65 at the bottom of the March sell-off, and then rocketed up 4,516% at their peak. And even though it has crashed pretty hard afterwards, it's still up 1,846% if you bought at that March price. I mean, I can't believe I missed out on Overstock stock and should have bought them in March, but as always, we all become stock market experts after the fact. But anyway, like I said, I'm still very happy with how my TJX company positions is doing right now. But on the flip side, let's talk about Alibaba, because it has had a very rough November. In Alibaba, the Chinese e-commerce giants, it crashed 15.27% in November, and this is despite them reporting revenue growth of 30%. And the big reason for that stock correction has to do with what happened with Ant Group, which is Alibaba's financial subsidiary. If you look at this news article, Ant Group was said to have the biggest IPO of all time, with a dual listing on the Shanghai and Hong Kong Stock Exchange, and was going to be valued at over $313 billion, which makes it larger even than Bank of America and Wells Fargo. But the day before they're supposed to go public, Ant's group IPO was cancelled or suspended by Chinese regulators. And the official reason that they stated was that the Ant Group no longer met the conditions of offering and listing or the requirements of information disclosure. But the truth has to do with what Jack Ma, who is Alibaba's founder and Ant Group's controller, what he said. Because during a Shanghai conference, Jack Ma, he publicly criticized the Chinese regulators for stifling innovations by being too cautious. And this was his exact words. He said, "What we need is to build a healthy financial system, not systematic financial risk. To innovate without risk is to kill innovation. There's no innovation without risk in the world." And I guess the Chinese government, they didn't like that one bit, and they basically laid the hammer down with the Chinese President Xi Jinping, he personally putting the stop to the Ant Group IPO as retaliation. He basically ended up showing Jack Ma and everyone else who the real captain was. So yeah, since Alibaba has a 33% stake in Ant Group, Alibaba took a nice tumble, and I was able to take advantage and basically load it up as much as I could. Right now, Alibaba is still trading sideways, but I don't really mind this at all because I still believe in Alibaba's long-term potential. And if we look at how it's doing right now, I'm still up 11.43% overall. So I'm just going to keep staying invested and just watch my gains go up after all of this blows over. Of course, there's lots of issues plaguing Chinese stocks in general. Besides this whole Ant Group IPO fiasco for Alibaba, we still have the ongoing US-China trade war, with the new president coming in. We'll see how that turns out. And another thing that is of concern is that Chinese government, they're cracking down on tech giants with anti-monopoly rules that's going to be a strong headwinds moving forward. Not to mention, the United States Congress, they recently approved legislation that threatens to delist Alibaba and other Chinese companies that don't comply with audit requests. And I touched upon this issue in my previous video, where Chinese companies, they weren't subject to the same audit requirements like American companies, which has led to a few investors being scammed and burned. In that video specifically, I focused on Luckin Coffee, which was once touted as the Starbucks of China, but how they falsely reported $300 million of sales back in 2019. So with all these issues and headwinds facing Chinese companies, and with all the scandals that have come from other Chinese companies, do I personally think that Alibaba is doing something shady? I don't really think so, and honestly, American companies, they do shady stuff all the time. But regardless, because of this and other reasons, Alibaba is the only Chinese stock that I own. It's probably going to be that way since I'm not really well versed with foreign companies compared to the United States companies. So yeah, that basically summarized what happened during my portfolio for the month of November. And as always, if you found my video helpful, do the right thing. Don't forget to like, comment to help with the YouTube algorithm. And if you haven't already, think about subscribing because it's also completely free. And do you know what else is free? That free $10 you'll receive if you use my referral links below to sign up and fund your free M1 Finance account. So yeah, like, comment, subscribe, get your free $10, and I'll see y'all next time with more financial shenanigans.